I'm Francine Lacqua.
And I'm David Merritt.
And this is In the City, Bloomberg's podcast connecting you to the conversations at the heart of the City of London.
This week, a conversation with Jim Mellon, the chairman of Burnbrae. Welcome to In the City, Jim.
Thank you very much.
Jim, one of the most famous UK investors, really touching on fusion, quantum, longevity, and now precision fermentation, Dave.
There we go, and we're going to come on to that. But first of all, I wanted to start with, really a broad question. I mean, Bloomberg economists have scrapped their view that the UK is going to go into recession this year. So, it's been a pretty bleak 6 months or so, lots of turmoil, the UK pound hitting new lows. Things are looking a bit better now, aren't they, Jim?
Yeah, I think they are. Universally, towards the end of last year, economists were forecasting that we would be the lowest growing economy in the G7, that actually we're not going to be, and we would probably eke out some growth this year, maybe more than some, maybe 1 to 2%. Part of that is because the stability has been introduced into our institutions. And secondly, because we are receiving 500,000 net new people a year. So you would expect them to be contributing something to growth. And of course, gas prices have fallen very, very sharply, which were a major contributor to the economic pressures last year. So I'm much more optimistic than I had been more optimistic than people.
You're the optimist when it comes to the UK. You've never not invested in the UK.
Well, partly because I live here. I've always had some UK shares. But, my background is an emerging market fund manager. And so I recognize that emerging markets have greater growth potential than here in the UK. But we are a country which has a very lowly valued stock market. Not many listings taking place. London supposedly losing its allure, although in other areas it's very strong. So I think that we should be a little bit more positive. And some of the areas that I like in the world, like commodities, oil companies, consumer goods companies, are well represented in the UK stock market. And it's about 13 times earnings, which seems to be a reasonable price to me. Decent dividend yields. And that's in contrast to the States, which is much more expensive. And where I think we're going to have a second, I've been very negative on the tech stocks last year, as you may remember, and we're going to have a second downturn in tech stocks in the relatively near future.
You mentioned stability, obviously, and we've had many conversations on this podcast about the turmoil of last summer. How did that look from your perspective? And has the damage from the Truss Kwarteng budget and the collapse in sterling, has the damage of all of that been healed yet, or is there still some sort of scarring in terms of the UK's image? Well,
that's a very good question. I think that the problem with them is they didn't have a bad idea for growth, but they just hadn't got a funding idea. There was no idea where the money was going to come from, and they didn't specify where it was going to come from. Now we have a much more sort of sensible, grown-up government, and it's been reflected in sterling going from record lows to 124 today. So a very significant increase. In fact, the the British currency is the best performing developed market currency this year, as you're aware. And although I think that the tax burden is too high, there is going to be scope over the next 5 years to reduce it further. And I think the UK continues to attract investment in many key areas and has very innovative people. So I'm not as pessimistic as some people are. But as you said, Bloomberg has reversed its view that there's going to be a shrinkage in the UK economy, which is a very important signal. And I think we'll eke out some growth, and we'll have quite strong growth next year, 2 to 3%.
Last year, a lot of people said, the currency certainly behaved like an emerging market currency at times.
I was going to say, as an emerging market investor, is
that unfair, Jim?
Yeah, no, I think that's reasonable. And I think this was because of the shock of the silliness of their budget. But, the great thing is that UK institutions, political institutions, are very strong and they bounce back very quickly. And I think that reflects the adaptability and, long-term history of our institutions. So if you look at somewhere like, I hate to say it, but look at France, for instance, that seems to be in perma-crisis. It's going to be very difficult to resolve that. Whereas here, we kind of resolve our problems.
But the banks, a lot of the big bankers are moving to France.
Right.
So is there a difference between what finance, and this is, it's not like 100% of the bankers, but they certainly need a base.
And they've got a bigger stock market
UK.
now, the French one we've talked about a lot here. So the trend seems to be post-Brexit that France is doing really well, right? Despite the
France's position relative to London is tiny. And of course, the stock market is very valuable, largely because of the luxury good companies, and in particular Louis Vuitton. But, London is still joint top with New York in the world by very large distance. And yet the UK stock market is like a tiny fraction of the US stock market. So I think the value of the stock market is a bit of a distraction. The number of bankers moving out of London is quite small, actually. And so I think this has been a surprise to a lot of people who are forecasting hundreds of thousands of jobs losses after Brexit. That actually, I'm not saying that Brexit has worked out well, because in many ways it hasn't. But as far as the City of London is concerned, I think it's been remarkably resilient.
I was talking to an LSE investor actually the other evening who said actually we're sort of distracted by the size of the stock market thing. It's kind of irrelevant. And the LSE is actually carving out a very successful future as a data provider with the Thomson Reuters deal.
Yeah.
So is it a bit of a red herring, this obsession with the kind of the size of the publicly listed stock market in terms of like the success of the city as a financial centre?
Yes, I think so. I mean, when I was young, boys used to compare the size of their respective armies, which is not a very good thing to do. But, the UK had a large army and Germany had a tiny army, and therefore we were a strong country. It's just not the way it worked, right? And I think it's the same with stock markets. It's much more important how are the high value added jobs doing in the UK? Where is the great strength of the UK? Clearly in foreign exchange and bonds, it's like absolutely number one, and there's no sign that it's deteriorating. And in challenger financial institutions, I think the UK is very, very strong as well. So things like Revolut and Starling Bank and so forth are remarkable and not really replicated anywhere else.
I've never heard of little boys comparing each other's armies. I mean, I remember my sister used to show off because she had 2 passports, but did you used to do that?
I bet you did. I bet you're much younger than me, so maybe this was a sort of post-imperial type of thing.
And of course, the UK had a navy. I mean, unbeatable, really.
Absolutely.
Jim, when you look at the banks and actually the banking crisis that we've had in the UK, I mean, how would you rate the government and the Bank of England in having dealt with that?
You mean the recent one? With
the SVB UK, yeah.
Well, I met Ian Stewart, who's the MD of Hong Kong and Shanghai Bank, and he said that, it was a remarkably smooth process, them buying it. And actually, it's worked out tremendously well. It was a great acquisition. Huh?
A bargain.
A total bargain, £1. And I mean, it's not a very big bank, but they acquired lots of deposits. And more importantly, they acquired, because HSBC is not known as being a dynamic institution, they acquired access to lots of fast-growing companies. And those companies, of course, are going to stick with HSBC because they had presumably an enormous shock when they woke up and all their money was lost.
Is that in question, though? Because we're hearing from people that needed funding that actually, because it's not HSBC's wheelhouse, that in a couple of years they won't have the same loans as they did under SVB UK.
That's possible. That's possible. And they'll start diversifying their bank accounts because, if you've got substantial money, and that's anything over $5 million, you really should have several bank accounts because you never know what's going to happen. And the insurance in the UK is £85,000 per account. In the US, it's unlimited now for regional banks, about $250,000 for, money center banks. And I think that, people will be much more careful where they put their deposits. But we've not had this tremendous migration of deposits in the UK that you've had in the US. I was saying to you earlier, Francine, 4,000 odd banks in the United States is far too many banks. There's got to be consolidation. There will be continued consolidation. Whether that occurs because the banks go bust or whether it occurs because they're merged, I don't know.
But it says something, doesn't it, about the ecosystem for startups that the British firms had to bank with SVB, and now they're going to HSBC, and in this talk that it's not in its wheelhouse. Isn't there a problem in Britain about investing in risk in startups? It's why we don't have a very successful tech infrastructure in this country, that they had to go to California for their banking. And what could be done about that?
Well, I don't know if they went to California. Well, they went to a Californian company which had a UK branch, right, which was to their benefit, I think, in the ultimately. I don't know if they went there because there was no British substitute. I think they went there because it was trendy. And everyone else was doing the same thing, and they had the best parties. And I'm not joking. I've asked several companies, why did you have all your money there?
Is that really how they chose their bank?
They kind of, a lot of them are sort of lonely geeks, right? I'm sorry, maybe I shouldn't say that. And the parties were very good, and so they went there.
You got a bank account and a social life.
And also they had a network, so they would introduce you to the appropriate venture capitalists and all that sort of stuff. So it was a sort of, but then those venture capitalists were the first ones to say, get your money out, like Peter Thiel, get your money out of the bank as soon as possible. And that caused the collapse of SVB, basically.
It's a brilliant business model, actually. Partisan banking.
But
someone's got to pay for the parties.
HSBC is not going to fill that gap. I mean, are you worried at all about the tech funding style? I mean, we have many conversations in this podcast about how the UK is not set up for risk investing. People don't like taking on that sort of risk. And it's one of the reasons why we don't have big tech companies based in this country.
Well, we have some big tech companies, but they tend to be owned by foreigners, right? So like Arm Holdings as an example, and that's going to be listed in the US. And we do have the largest inflow of money into venture capital in Europe by quite a long way, and that's continued really post-Brexit. And there's some very, substantial organizations like Founders Forum that are based here. So it's not all bad news, but we should do more to encourage it. Some of it is the fact that we don't have the very close nexus between successful venture capital firms, universities, and government that you have in the United States. And I think that we actually need to encourage that. I think the UK government should be much more proactive in targeting industries that are strategically important, where we can be large players, and do that quickly.
But they tried, didn't they? I don't know is it a risk factor that in the US at some point you go big or you go home. So you want to expand, and so you have market share very quickly, and so you become the dominant player. I'm thinking of Uber, but also a lot of these other big tech firms, which Europe and the UK does quite badly.
For instance, Regis, I can't remember what its name is now, but the shared office space, the biggest in the world, actually, I think it's bigger than WeWork now, is trying to do an Airbnb for what they do, basically. And that's a British company, and I think that's a great idea, and if they probably have the appropriate funding and so forth. I think if you've got enough of a good idea, you'll get funding here in the UK. But we somehow or other need to encourage. I mean, I was also reading that Oxford University, my alma mater, is very bad at sort of supporting spin-outs because they take too much of the equity from the scientific and business founders. And we need to, like Stanford doesn't take any equity. It relies on their generosity when they're successful, and they hand money back to Stanford as alumni. And I think Oxford, Cambridge, and the other successful universities in the UK should start thinking about that, not trying to grab some sort of instant share, but think about the future. And when these people are in their 50s and 60s and they're thinking about estate planning, they give more money back to their institutions.
Jim, which industries then do you think Britain can really be successful in? I think, where are you investing now for the next 5-10 years?
Well, I'm not necessarily investing in them because I don't have unlimited funds, but I think that in terms of strengths in the UK, one is AI and quantum computing. And a company like DeepMind is based here in the UK. It's a very, very interesting company, very successful. You've got some AI companies that like Exscientia, which are developing drugs using machine learning and generative AI. We have a company called Relation that's doing the same thing, based quite close to King's Cross, where a lot of these interesting companies are. And in terms of quantum computing, we have the clear leader in quantum, I think, in the world, which is Quantinium, based in Cambridge, which was set up by a friend of mine. And I have actually invested in his company. And recently they did a merger with Honeywell, and they're valued at some vast amount of money, probably the biggest startup company in the UK. So I think that's a very exciting area. And, anyone who reads about AI, chatbots, and, all the money that's being poured in by Microsoft, Google, and so forth, will realize that this is a strength of the UK.
But DeepMind is owned by Google. And I met the owner,
Demis.
I met the founder, who's amazing, who actually asked if we wanted to play chess. And I said, I don't think my ego can take it. I think he'd flatten me out in like half a second. But it's owned by Google. It's not really a UK company. He's British.
Well, no, but the thing is that, do you have to care about the ownership of the company if it's, first of all, it's not making any money, which it doesn't, and secondly, all the employees are based in the UK? And I think that's, we have lots of foreign-owned companies, and we own a lot of foreign companies. And I think it's more about the employment and the quality of the employment, and that's here in the UK. And they're based out at King's Cross as well, which is becoming quite a big sort of centre for technological excellence. So I think that's a very exciting area. And by the way, quantum computing is going to revolutionize a whole bunch of stuff, including drug design, cryptography, etc. In cryptography, we're pretty strong as well. So I think that's an exciting area. The second area of, excitement for us is in the food industry. And, I'm very, very keen on changing the food supply. We need to do it because there's too many emissions resulting from our current way of producing food. We have a strong agriculture and humane agricultural tradition, but we import half of our food. If we could find a way of creating proteins and materials here in the UK, and we can, because we've got the technology, we've got the people, we need to do it, then we should be encouraging that. And I think the government should wake up on that one.
I mean, some of the new food startups, the meat substitute companies, have sort of stumbled a bit recently, haven't they? Because the public isn't quite sold on eating something that looks like bacon but is made of plants. I mean, do you see a different future for...
Well, that's a very good question. And this is a confusion in the minds of the public between plant-based foods, which are not necessarily environmentally better, although probably are, and not necessarily better for your health because they tend to be highly processed, like Beyond Meat or Impossible Burger and so forth, which people, in the pandemic tried out and now they sort of flatlined. What we're trying to do is to make real meat, real fish, real materials, real cocoa, real collagen in laboratory conditions, real dairy products, real eggs, etc. And that is happening. All the companies that we've invested in are making those products. The question is, at what scale can they make them and at what price? And that's the key execution challenge. But the UK farmers here, for instance, could situate bioreactors on their farms and do extremely well out of it. And so it just needs a different conversation. But we have a very strong ag tech sector here, the best seed geneticists in the world.
Jim, do people want to eat that? I mean, there's pushback against genetically modified foods.
There is.
So then lab-made meat is another level.
You're absolutely right, Francine. So basically, we start with dairy products and eggs because those are ingredients largely. Most people don't have their dairy product in the form of milk. They have it in the form of yogurt, cheese, etc. The dairy products produced by precision fermentation, which is not cellular agriculture, it doesn't come from stem cells, is absolutely acceptable to consumers. And it's already on sale in the US.
And precision fermentation is something that's been around for,
40
decades?
or 50 years.
Yeah.
The problem is there aren't enough precision fermenters out there. And so we created a company called Liberation Labs, which is building the first brand new facility in Indiana in the US. And it'll be up and running by the end of next year, which is remarkably fast. It's very expensive to build that. And the idea is you build capacity and then people rent it from you because they can't afford to build their own facilities, but they need to have precision fermenters to make their products. So that's the sort of way that we're looking at that. But there's lots of white space opportunities for British entrepreneurs to get into this field. And by the way, agriculture is a bigger industry than the car industry around the world, including electric vehicles. So there's a huge total addressable market, and it's something we do every day. And something that the developing world wants more and more of. They want more animal proteins. And if we can produce some of them this way, that's great for alleviating the environmental pressure. I think it's a multi-generational thing. It will take decades. So there's no immediate concern for farmers.
Amazing. And are we going to see a wave of these companies coming to market now? Because obviously you mentioned Beyond Meat and these things that came and listed in the last couple of years. But are we going to see more of these companies emerge maybe in the London market and in the US?
Yes. Luckily, none of them went public in the period of SPACs and all that sort of stuff because they were too early. But we listed a company called Agronomics, which is, I think, one of the world's largest investors in this area. It's listed on the London Stock Exchange. And that's an investor in this field. But the individual companies, I think you'll see some of them are going public and some of them being acquired. So Nestle, Unilever, Kellogg's, the big food producers around the world, Danone, they'll be buying these companies.
So, Jim, this is where your love of dogs comes in. So Dave loves dogs. I love dogs, but we have one each. You have 7 dogs, and you want to make pet food for dogs.
We are making pet food for dogs. And so here in the UK, another example of British innovation, by the end of this year, we'll have a dog food on the market, which is made from cell agriculture. It'll be chicken-based. And the great thing is that the regulatory pathway for dogs is not as extensive as for humans. So it's about a 3-month pathway. And the second thing is that dogs don't care what it looks like as long as it tastes good.
I don't know. You haven't met mine.
Fussy, Lacqua dog.
He or she will absolutely love the good dog food.
And you were saying that basically 25% of all meat ingredients in the UK go to making pet food.
They do.
It's a huge part of the market.
It's a huge part of the market. And the biggest... So here's a question. Which is the biggest company in pet food in the world?
Blank.
Nestle, I mean, I would say Nestle with Purina.
It's Mars.
With?
Pedigree. Chum, and a whole load of other ones.
And how big is that market? Billions.
I think in the US, the pet food market is $65 billion, growing by 8% a year or something like that. remember,
Is that the pandemic dogs?
We doubled the number of dogs in this country, during the pandemic, almost.
But with the cost of living crisis, if you don't have a good price point, then people can't buy it.
Yes, so our product will have to be at a good price point, and they're working very hard to do that, and I think it's going to be achievable. So it's it won't just be the cell chicken. They'll have the other ingredients like plant-based stuff and so forth in there, vitamins, and it'll be a very, very good product for the dogs. And I promise you, 7 dogs, I know you both love your dog, that I will be the first dog to try it will be Juno, the dog. And as long as she carries on living, then we know the other 6
Does
have
Juno
it as well.
have a good appetite?
She has a very good appetite. Yeah. If she turns her nose or her snout up at it, then we've got a problem.
Jim, can I just go back to something you said right at the beginning about the UK growth? And you talked about the stability, but the second thing you said I thought was interesting about immigration.
Yeah.
You said, 500,000 people net immigration, and that is one of the reasons why the economy is going to grow. It's a controversial topic here, of course, and after Brexit, we were supposed to have perhaps lowered that number. But can you talk a little bit more about the importance of immigration to Britain and to the City of London as well?
I think it's really important that we carry on welcoming as many people as we can feasibly take. And obviously, there has to be some recognition that we are short of certain skills and we need to bring those people in. And we just need to be much more liberal and much more welcoming and friendly. I don't think that the pushing back of the boats and that sort of thing gives us the image that we deserve and that we need. And so the government's got to be much more pragmatic about this. But 500,000 people a year, I think, is a reasonable entry point for an economy of 70 million people, and they will ultimately contribute very significantly to our economy. So we don't put them in hotels, give them the right to have a job and skill them up if necessary. If they've come with no skills, put them into a situation of higher education.
I find it quite refreshing, actually, to have someone who's an investor who's so bullish on the UK. In general, Jim, do you think markets or investors are just too downbeat on the UK, given what we've lived through in the last 18 months?
Well, I think you both referred to the shock last year, and I think that will take some time we'll get over it. But, there are sort of sensible adults in the room at the moment. And, either the Conservatives or the Labour Party seem to have a reasonably balanced approach to things. As I said, I think that, taxing companies out of existence or the rich people out of existence is a very bad strategy. And we need to find a way of keeping on incenting high achieving entrepreneurs. It's a vital part of this economy, really.
And do you see the UK still attracting those entrepreneurs? Because, Brexit has put up some barriers to movement. Obviously, we've talked many times in this podcast about how hard it is for, say, a young banker in France to come and cut their teeth in London. But is London still able to attract those people? And the tax regime is another factor as well.
Well, the taxes here are not as high as they are in many European countries, let's face it. But then some of the public services are not as good as they are in other European countries. So, yeah, I think we will carry on attracting people. I think we'll have as many people as we want, as long as we make them feel welcome. And look at London in the last 30 years. I mean, I've been wandering around the streets of London for the last 30 years, and it's a vastly more diverse and, as a result, much more exciting place. And it's got so many more good things going for it than it did 30 years ago. And that's possibly largely due to immigration.
Yeah. And the grown-ups in the room, you mentioned, sitting in Downing Street, might not have much longer to stay there, right? We're going to have an election probably next year.
Yeah.
But when you look on the other side of the political fence, how do you feel about a possible incoming Labour government and Rachel Reeves as Chancellor?
I actually don't think it will make much difference, to be quite honest.
They're pretty interchangeable, are they, do you think? In terms of
I think that I really don't like politics. I think that, I don't understand why anyone wants to be a politician, but I have friends who are very interested in politics. And they are, they've got pretty good judgment. They think the gap between the two parties will narrow dramatically between now and the election. I think that's probably true. But I don't think the markets will take fright if there's a Labour Party victory, or indeed, they'll be too disappointed if there isn't a Conservative Party victory. The only thing that I would say is that there's the sort of assumption maybe in the Labour Party that you can tax oil companies and you keep on taxing them, and then that can pay for all the council tax freezes, et cetera, et cetera. That's, I think, wishful thinking. because we really need to do something about promoting drilling in the North Sea for gas and for oil, because we're far too dependent on imports.
Thanks for listening to this week's In the City. We'll be back next week.
If you like our show, please head on over to Apple Podcasts or wherever you listen to podcasts. Rate, review, and subscribe.
It helps people find our show, so please take a second to leave a rating.
Now, the episode was hosted by me, Francine Lacqua.
And me, David Merritt.
It was produced by Summer Sadi, Zainab Siddiqui, Moses Andam.
Additional editing by Blake Maples.
Special thanks to Jim Mellon.